Good morning, everyone. Welcome back to your revision classes for auditing. Today we are on our last chapter, last session for revision, and we'll be covering chapter number 9 and chapter number 11. One is about ethics of audit, and chapter number 9 is about the practicalities of audit in different entities. So let's get started. I hope you can all listen to me, see me properly. So let's get started. First with chapter number 9. Let's come with the first thing. No inspection under section 79 of Multi-State Cooperative Societies Act shall be made unless a notice has been given to multi-state cooperative society. Explain clearly when and how such inspection can be made. Also state the powers available to central registrar in this regard, along with provisions relating to communication of inspection report under the said section. So firstly, we know that this is from the audit of cooperative society and multi-state cooperative society. Okay, it's cooperative society plus multi-state cooperative society. This part we are studying now. Now, if you have to pay attention here, the trick is there was inquiry by registrar and there is inspection by registrar. And this question is about inspection, not inquiry. So pay attention on this word here that it is regarding inspection so that you don't make a mistake. Okay. So this question is about inspection. Now, when can inspection be ordered by central registrar? So central registrar can order inspection on a multi-state cooperative society when either a federal cooperative to which you are affiliated. What does this mean? So if I'm running a milk company like Sumul or Nandini, I can be associated to Dairy Farmers Association or Dairy Farmers Cooperative. So if I'm affiliated to a mother institution like a federal cooperative, then if that federal cooperative complains about me, then the central registrar can order inspection. A creditor. If even one creditor of the multi-state cooperative society lodges a complaint against the multi-state cooperative society, registrar can order inspection. Then 1/5 of the total number of members. So if total number of members, 1/5 out of the total number of members decide to complain about the or decide to approach central registrar that please do some inspection on this society, then central registrar can do inspection. Or 1/3 of members of board. So if these decide, then also you can the central registrar can order inspection. So when can inspection be ordered? First is this answer to remember, that when the federal cooperative to which you are affiliated has made any kind of complaint, a creditor has made 1/5 of the total number of members or 1/3 of the members of the board. So this point is very, very clear. Okay, so if we'll come back, this one point you have to remember. So central registrar may. See, it's not should. Why you can't write should? It is not necessary that central registrar will do it. You can send a request, but central registrar is the authority who will decide whether they want to do it or not. So central registrar may, on a request from federal cooperative to which they are affiliated, a creditor. A creditor means no limit. It means it's not mentioning that you are a creditor of 1 lakh rupees or 10 lakh rupees or 50,000 rupees. If you are a creditor, you can send the request to central registrar. Whether central registrar takes you seriously or not, that is central registrar's decision. Not less than 1/3 of the members of the board and not less than 1/5 of the total number of members. Okay, so this can be done. Now who? So when is there? Okay, then how it is done. So you can also see that how it is done. The registrar can give a general order. General order means central registrar has released a general order that all the multi-state cooperative society which are present in more than 5 states will get inspection. So that's a general order. Specific order means you who are a multi-state cooperative society like Saraswat Cooperative Bank, we will inspect you particularly. That is called as a special order. So general order means overall order to audit, to inspect a lot of different cooperatives, and special order means specifically for some multi-state. So by general or by special order in writing, of course, you can inspect or direct any person authorized by him. It's not mentioned who can be inspector. It can be anyone from the multi-state cooperative department, as in central registrar's department, central registrar himself, an external person. It can be anyone. It is not necessary. It will be a chartered accountant. It depends on the registrar to decide who will be the authorized person. Okay. Now, opportunity to being heard is very important. Inspection is not a raid. Okay, you are not raiding. That is why you have to give a notice of not less than 15 days. Please remember, the central registrar has to give a notice of not less than 15 days. Then what are the powers? So what all did we see? पहले तो कब हो सकता है? When can central registrar order inspection? कैसे कर सकते हैं? How? How they can do it? By general or special order by a person that is authorized by them. Then opportunity of being heard, 15 days. Remember this. This is important for MCQ also. It can come in MCQ also. Then what are the powers available? So central registrar or the person authorized by central registrar can have following powers. First, just underline, at all time have access. Okay, have all time have access to everything, access to books, accounts, vouchers, securities, stock, everything. Okay, they also have power to verify cash balance. Okay, they have power to verify the cash balance. They also have, by subject to order, to call a meeting of the society. Three points you remember in this one. 2, 3. What are 3 points? That he shall at all times, okay, not reasonable times, at all times, which can mean any time of the day, 2 a.m., 3 a.m. also. So he shall at all times have access to books, accounts, papers, vouchers, security, stock, everything. Then you have also power to verify, which means you can tell them, please open the locker, I want to count the cash. And you also have power to call a meeting when you think it is necessary. Then you also have power to ask every officer or member to furnish information with regard to working of society or person making such as the registrar may require, which means you can ask any member also, not just the managing committee, but also the members, that if I am asking you for certain information, you have to provide me that information. Okay. Now, inspection report. Just remember this, 3 months means central registrar, a copy of the report of inspection under this section shall be communicated to the multi-state cooperative society within 3 months. What does it want to say? Which means central registrar report. So whoever has done the inspection will give the report to central registrar. Now central registrar has to inform that what happened in the report, what happened in the inspection, what were the findings. So central registrar has time of 3 months. Okay, has time of 3 months to send a copy of that report. So original report is already with central registrar. They have a time of 3 months to communicate that report to the multi-state cooperative society. Everyone, I hope it is clear. So what did we study? Let's go through it quickly. So when can inspection be ordered? When there is a request from a federal cooperative to which you are affiliated, a creditor, 1/3 members of the board, 1/5 members of the total number of the members. Then you have to give 15 days of opportunity. Then multi-state cooperative society registrar, central registrar, by general or special order can authorize themselves or any other person to conduct inspection. What powers they have? To access at all times all the books, documents, vouchers. Then they have a right to call for right to verify cash, and right to call a meeting if necessary. And they also have a right to ask any member or officer to give such information regarding the workings as necessary. And how much time does central registrar have to give the report? So central registrar have to give the copy of the report to the multi-state cooperative society in 3 months of the receipt. Okay, that's it. Let's come to the next question. Audit against rules and orders aims to ensure that expenditure conforms to the audit against rules and orders conforms to the relevant provisions of constitution and of laws made thereunder. The job of audit is to see that these rules and regulations are applied properly by subordinate authorities. It is, however, not the function of audit to prescribe what such rules regulations shall be, analyze and explain. So firstly, what is this topic? This topic, let's identify, it's part of expenditure audit. What are the different types of expenditure audit? Audit against rules and orders, audit against rules and orders. Then second type is audit of sanction, audit of sanction, audit against provision of funds, propriety audit, and performance audit. So these are the 5 types of expenditure audit. In under which topic this comes? This comes in government audit. So first, your mind should be immediately able to recall that which topic are we studying from, okay? Which topic is the question from? So the topic is government audit. Under that, there is expenditure audit. And in expenditure audit, there are 5 types of expenditure audit. And the question is regarding the first type, audit against rules and orders. Audit against and rules and orders is the most basic form. There, the primary thing is to check compliance. It means we have to check that the constitution plus laws made thereunder, rules made thereunder are properly followed. And also the financial rules and regulations made by competent authority are properly followed. What does this mean? Let's say that when you go to a bank, okay, to get a loan, let's say you go to a government bank, okay, there is a general rule. There is a general rule which is by default a law that the bank cannot provide you loan to do betting business, right? You cannot provide loan for betting business. But individual banks can have their own rules, that SBI can have their rules that how many years of ITR returns they want. And BOB can have a different rule regarding what kind of product they want. So when as an auditor, you go to audit and you're checking compliance, audit against rules and orders, you check orders and rules at 2 levels. First, the act, the main act, the constitution should not be violated. The laws should not be violated. So Companies Act has certain laws, and I am running my own company can have my own rules and regulations, right? So as an auditor, you have to check that the main constitution, laws and rules are not violated, and also the financial rules and regulations made by authority of that entity are also not violated, okay? Now, to remember this answer, you also need to remember that auditor needs to check all the expenditure done from the Consolidated Fund of India, Contingency Fund of India, okay? All these expenditure we have to see. We have to see all the allowances, pension payments, all this has been properly done. Claims against government has been properly paid. So basically, you have to check that all the expenses that have been done using the funds of our country are done as per the rules of constitution, the law, and also the rules and regulations made by the competent authority. Now your question says one very interesting thing, that the job of the audit is to see that these regulations are applied properly. It is not my job to prescribe what these rules shall be, which means I am going to check whether the laws are followed, but I am, as an auditor, as a C&AG, not going to create those rules and regulations. All right. So audit against rules and orders. So I just taught you a mind map. Mind map as in, when we see the question, ये सब क्लिक होना चाहिए. All this should click to you. क्या क्लिक होगा? ये किसका क्वेश्चन है? ये गवर्नमेंट ऑडिट का क्वेश्चन है. ठीक है, ये गवर्नमेंट ऑडिट का क्वेश्चन है. अंडर गवर्नमेंट ऑडिट किसका क्वेश्चन है? एक्सपेंडिचर ऑडिट. विच क्वेश्चन? एक्सपेंडिचर ऑडिट. एक्सपेंडिचर ऑडिट मीन्स व्हाट? ऑल दीज 5: एक्सपेंडिचर अगेंस्ट रूल्स एंड ऑर्डर्स, ऑडिट ऑफ सैंक्शन, ऑडिट अगेंस्ट प्रोविजन ऑफ फंड्स, प्रोप्राइटी ऑडिट एंड परफॉर्मेंस ऑडिट. नाउ क्वेश्चन स्पेसिफिकली किसका है? क्वेश्चन स्पेसिफिकली है audit against rules and orders. What is audit against rules and orders? It talks about compliance. Kiska compliance? Constitution, laws and rules, and financial rules and regulations made by competent authority. कौन-कौन से खर्चे देखे जाते हैं? Consolidated Fund of India से खर्चे, Contingency Fund of India से खर्चे, means expenses from Consolidated Fund of India, expenses from Contingency Fund of India, allowances and pension that you give to lot of government employees, government officials, parliament members, and claims against government. So as soon as you see the question, all these keywords should start flashing in your mind. Okay. Now, after all these keywords are there in your mind, you start to organize the thoughts, and that is when an answer is created. Okay. So see this. Audit against rules and orders aims to ensure that expenditure conforms to relevant provisions of constitution, laws and rules made thereunder. It also seeks to satisfy that expenditure is in accordance with financial rules, regulations, and orders by competent authority. These words you cannot change. It conforms to provisions of constitution, laws, and rules. It is also that expenditure is in accordance with financial rules and regulations of competent authority. Okay? Means authority who has the power to make those rules and regulations. Audit of expenditure against regularity, it is same rules and orders. Okay, is a quasi-judicial type, means like judicial audit. It involves interpretation of constitution, statutes, rules, regulations, and orders. The final power of interpretation is not with C&AG. The final power is usually with the courts and the law that is passed. But when we are doing audit, we have to do, because of the nature of the audit, we also have to make our own interpretation of the law. So even if you are a company auditor, you need to understand company law so that you can audit a company. That is what it is trying to say. So when you are a C&AG, when you are doing government audit, it is your job to interpret the constitution so that you can see whether the constitution is followed or it is violated. But the final interpretation is not with you. Okay. These rules and regulations against regularity audit. So just remember this. It has a second name of regularity audit. So sometimes institute uses it differently. But you yourself don't use easily. The primary name is audit against rules and orders. Okay. But during explanation, you can use. But when you are writing 5 types of expenditure audit, that time you have to use audit against rules and orders. Okay. So regularity audit is an old name. So these rules and regulations against regularity audit is conducted mainly under the following categories. Rules and orders regulating the power to incur and sanction expenditure from Consolidated Fund of India or state or Contingency Fund of India or state. So regularity audit में सबसे important चीज हम क्या देखते हैं? What is the most important thing we see? That what are the expenditure that have been sanctioned and actually have happened from consolidated fund and contingency fund. So basically expenditure audit. So let's imagine the whole consolidated fund of India is made up of GST, made up of income tax income, so many taxes that government gets. So the consolidated fund is made up of that. From that, expenses are done for education, for medical sector, for infrastructure development. So all these expenses are being done for farming activities. So I have to see whether those expenses were done as per the relevant laws or not. Then rules and orders dealing with mode of presentation of claims against government. So if anyone has put up a case against government, if there is any payment that is required to be made by government in terms of any loans or any kind of compensation, so any claims against government are also a type of expenditure. So you have to see that if you are withdrawing any money from consolidated fund, contingency fund, public accounts, or state that financial rules are properly followed. So whatever is the procedure, it is properly followed. And rules and orders against condition of service, pays and allowances, pensions are properly. So this I already told you. As soon as you see the question, all these keywords should start coming in your head. Consolidated fund, contingency fund, allowances, pension, claims against government. Okay. So this much is finished. Now, it is the function of executive government. So, who will frame the rules? The government needs to frame all the rules, regulations, and orders, which are to be observed by subordinate authorities. The job of the audit is to see that these regulations are applied properly. It is not the function of audit to prescribe what these rules and regulations should be. मेरा काम नहीं है कि मैं बताऊंगी कि आपको क्या काम करना है, कि rules क्या होने चाहिए. No. The job of the auditor is to just check that whether the rules made by the government are followed by the authorities who have to do the actual work. But it is the function, okay, but it is the function to carry out examination of rules to see that they are not inconsistent with any provisions. So, when rules are made by competent authorities, so we saw two things, that expenditure audit is about two things, that you have to see whether compliance of provisions of laws and regulations is done or not, and the expenditure is as per the financial rules and regulations made by competent authority. Now you tell me, if I am a bank, okay, and if I am giving any kind of loan, I can decide, but can I violate the basic banking regulation act? I can create my own internal control system. I can create my own policies to give loan. But can I violate, can I make the rules, even if I am director of SBI Bank, can I make the rules that violate Banking Regulation Act? No. So as an auditor, when you are checking a bank, so you have to follow Banking Regulation Act, Companies Act, so many other acts. But there can be individual rules made by the authorities in the bank also. So that at that time, if the rules are made by competent authority, what does an auditor check? Auditor checks that they are not inconsistent with provisions of constitution or any laws. They are properly consistent with essential requirements of audited accounts by C&AG. They do not come in conflict with orders or rules by any higher authority, and they have not been separately approved by competent authority. In case they have not, the issuing authority possesses the necessary rule-making power. If it means some expense was done, let's say I am the competent authority and I was away on a vacation. Now I left the authority, let's say, with Kavisha. So Kavisha became the issuing authority till the time competent authority is on leave. So if issuing authority, when I was gone, Kavisha has made some decisions. Kavisha has done some expenses. So did the issuing authority had the necessary power to make those decisions? That is called as one of the things that auditor needs to check. So what does an auditor needs to check? So when it is a function of audit to carry out examination of what? That the rules made by executive authority are not inconsistent with constitution and laws. then they are consistent with the requirements of C&AG. They do not come in conflict with orders or rules made by higher authority. And if they are not approved by competent authority, then whoever is the issuing authority, they have the necessary powers. I hope the whole answer is clear. A lot of things were there, but it is a very, very important answer. I told you how to think this answer. So in exam, आपका माइंड मैप, आपका माइंड कैसे रन होना चाहिए, व्हाट शुड बी द वे इन द फ्लो ऑफ योर माइंड. क्वेश्चन देखते ही as soon as you see the question, it should click which question this is. Government audit. Under government audit, which question? Expenditure audit. What are the types of expenditure audit? This. What was audit against rules and orders? About compliance. What kind of compliance? Constitution, laws and rules, financial rules and regulations made by competent authority. What kind of expenses do we check? Expenses from consolidated fund, contingency fund, allowances, pensions, claims against government. Can I make those rules? No, it is not the job of the auditor. It is the job of the auditor to check whether these are followed or not followed. And whenever the rules are made by the executive authority, that is the competent authority, we need to check that they are not inconsistent with the constitution. They are following the essential requirements of C&AG, that they do not come in conflict with any higher authority, and the issuing authority has powers. Okay. So this we are done fully. I have revised it 2 times with you. So I know this is a little theoretical answer. That is why I have done it 2-3 times. I have given you a mind map so that you can remember an exam. All right. Everyone clear with the answer? Can I move on to the next one now? Just let me know quickly. All right. Okay. So let's go to question number 3. Aman Cooperative Society has appointed FAB associates. So again, this is a question regarding cooperative society. Immediately be clear what the question is. Okay. You don't have to write this. I'm telling you how your mind should work, the mind map. Okay. So immediately I should know this is cooperative society question. You have been appointed auditor for 23-24. During the audit, the auditors noted that the number of shares are this. Net profit before compulsory transfer of fund is this. Net profit after compulsory transfer of fund is this. Mr. Dhairya, a member of society, holds 200 shares amounting to 2,000 rupees. Immediately our mind should think, oh, what is this question about? This question about restriction on shareholdings. Mind should immediately remember that this is a question of restriction on shareholdings. Now, if you remember, cooperative society works for the benefit of everyone. Okay. There is no minority shareholders concept. Okay. The cooperative society's purpose is not maximization of profit, but maximum benefits to its members. So it does not allow a single shareholder to hold a lot of shares in the cooperative. So there are restrictions on the shareholding. So the question is about restrictions because they have mentioned how much shares they hold and how much value of the shares they hold. Okay. What is the second part? Upon verifying society's borrowings, the auditor found that cooperative society has accepted a loan from Mr. Shivam, a non-member. The auditors did not find any restrictions regarding this in society's bylaws. So, borrowings के लिए कोई central law नहीं है. There is no central law that places restrictions, which means it can be as per bylaws. So, if bylaws is not putting any restriction, is it allowed to take loan from Mr. Shivam? Loan from. It's not talking about loan giving. Okay, it's talking about borrowings. Cooperative society can take loan from whom? They can take loan from anyone that is allowed under the bylaws or if there is no restriction in the bylaws. So comment on the above. So immediately as soon as I read the question, my thoughts are clear that what this question is about. So the first thing is restriction on shareholding. What does the Act say? Act says that where the liability of a member is limited, no member of a society other than registered society can hold portion of share capital that would exceed 20% of total number of shares or the value of shareholding to rupees 1,000, which means out of total number of shares, total quantity of shares, you can hold 20%, but subject to how much can be the maximum value? Subject to maximum value of rupees 1,000. Now, what happens in the question? How much value of shares is Mr. Dhairya holding? They are holding shares of 2000 rupees. Is this allowed? No. So it violates this section. Restriction on borrowings. Section 30 of Central Act puts restrictions on borrowings. According to this, a registered society can accept loans and deposits from persons who are not members subject to restrictions and limits of bylaws. So it has to be as per the bylaws. So auditor has to examine the bylaws. Now, so you have mentioned general concept. Now you give the case and conclusion. Okay. Now we'll give case and conclusion. What happens in the given situation? Mr. Dhairya, a member of society, is holding 200 shares amounting to 2000. In view of the aforesaid mentioned restriction, Mr. Dhairya is allowed to hold a maximum of 100 shares according to the Act. You can hold a maximum of 100 shares of 1000 rupees. Further, Aman Cooperative Society has accepted a loan from Mr. Shivam. Since there are no restrictions regarding acceptance of loan in the bylaws, the loan received is completely okay. So, that is how we evaluate the whole part. Okay, everyone clear? Very small answer. If you identify from the question that for which this question is being asked. Let's go to the next question. While auditing the financial statements of bro traders, LLP. Okay, so immediately it should be related to LLP audit. Okay, it might be related to LLP audit. CAL is carefully going through LLP agreement. Okay. Briefly discuss key points of CAL should pay attention in LLP agreement and reporting the reporting responsibilities of CAL. So just remember LLP agreement. What is usually there in LLP agreement? There will be what business are we doing? Okay. Then duration, whether it will be at will or it is for specific period of time. Then capital, how much capital is everyone counting? Then what will be the interest on capital? I'm just teaching you how to have a flow of thoughts correctly. Okay, what will be the capital? What will be the interest on capital? Same way there will be drawings. How much drawings is allowed? Okay. Then how much salaries can be allowed? How much salaries can be allowed? How much borrowings can be allowed to the partner? What are the rights and duties of the partner? Okay. Then what will be the profit sharing ratio? See, your mind should immediately go and think that एक LLP agreement में क्या-क्या points होते हैं. Okay. So what are the points usually covered? So if I want to create an LLP with someone, I want to decide what business we'll do, for how long we'll do the business, how much will be the capital contribution, what will be the interest on capital, how much can we draw from how much can I withdraw? So drawing power, borrowings, how much can I take loan, how much salaries will we get, what will be my right, what will be my duty, what will be my profit sharing ratio, what will happen at the time of admission of a new partner, retirement of a new partner. Okay. What will happen? How will we do that? Okay. What will happen if loans are given by partners? If partners give loans, not capital, they are giving loan, how to do that? So an LLP agreement should have all these details, and this is your answer. Okay. So if you can think about what does an LLP agreement consist of, you can write this answer very easily. Even if you know what partnership deed was, which we studied in 11th and 12th and CA foundation also, you know what a partnership deed is made up of, what points are there in partnership deed. If you remember that, this answer you can easily attempt in exam and you can get proper full marks. Okay. So the auditor should read the LLP agreement and note the following provisions: nature of business, amount of capital contributed, interest in respect of additional capital, duration, drawings allowed, salaries payable to partners, borrowing powers, rights and duties, methods of settlement of accounts at the time of admission, retirement, any loans advanced by the partner, profit sharing ratio. So this we have finished the first part. So this first part is done. What is the second part? Reporting responsibilities. So this reporting responsibilities are very, very like universal. Okay. What are the reporting responsibility? Whether the records appear to be correct and reliable, whether we were able to obtain all the information and explanation necessary, and whether any restriction was imposed on me while doing the audit. That's it. So these three things I have to report in my report. In the audit report, we have to mention these, that whether the records are correct and reliable, I have obtained all the information that is necessary, information and explanation that is necessary, and whether there was any restriction. So this answer is finished. Okay, so I have told you how to think about this answer. So how to process this answer and then how to write it in the exam. All right. Next question. Now, next question. A government department has been allocated a budget for infrastructure development. Okay. During the audit, the auditor observed that the following. Okay. So you are doing a government audit as usual. You are observing some things. What are you observing? Some payments were processed without proper approval from the competent authority. Means कुछ खर्चे हो गए और आपने permission ही नहीं ली competent authority की, you did not take approval. So what kind of audit is this? So do you remember I taught you 5 types of audit? Okay. What is this? You did not take approval, which means what audit this will come under? Audit of sanction. Okay, just remember those 5 expenditure audits. So some payments were processed without approval. That means it will come under. So audit of sanction will be required. Okay, so this becomes a question of audit of sanction. Let's see the second. A large scale project was implemented, but no assessment was made regarding the expected benefits were achieved or not. Now you remember triple E, economy, efficiency, effectiveness, which means whether some project is successful or not. A project is successful or not. Where do we check it? Performance audit. Then third, funds were utilized from an account where no provision was available. इसमें तो question में ही answer है. Audit against provision of funds. Audit against provision of funds. Then certain expenditures were made without following the prescribed regulations. Regulations means rules. So audit against rules and orders. Audit against rules and orders का question है ये. And last, there were instances of unnecessary spending that did not align with financial propriety. Again, in question only it's there, propriety audit. Okay. So this question is testing your understanding. Okay. It's testing whether you remember the expenditure audit fully or not, all the 5 types, and whether you understand them or not. Whether you understand what is sanction audit, audit of sanction, what is propriety audit. So this answer is quite self-evident and clear. The audit of expenditure audit is one of the major components. The basic standards set are as per this. So when the payments are processed without approval, an audit of sanction is required. This audit ensures that sanction, either special or general, is as per the competent authority. When there is large scale project has been implemented without any assessment of whether expected benefits were achieved, performance audit is necessary. This type of audit ensures that various schemes, programs, projects have been incurred, are running economically and are yielding expected results. Okay. Anil, I don't understand. What are you saying? What do you mean by that? Back-end questionnaire? Can you explain what it means? Okay, you type the, what do you mean? Meanwhile, I'll just continue. When funds were utilized from an account where no budgetary provision was there, the audit against provision of fund is conducted. This ensures that there is provision of funds out of which expenditure can be incurred and same has been authorized. So, properly incurred, properly authorized. If expenditures are made without adhering to financial regulations, it means an audit against rules and orders is applicable. This audit ensures that the expenditure incurred conforms to the provisions of the statutory enactment and is as per financial rules and regulations framed by competent authority. When I mean indirect questioning, yes, it takes time, Anil. That is why I tell you that practice Q&A. See previous year MTP. Don't think that just because you have read the chapter, it's enough. Questions are equally part of your syllabus to study. Okay. So as much as it is important for you to study the theory of the chapter, it is equally important for you to go through Q&A. So study previous year's MTP, RTP. You have to also go through previous year's suggested answers and question papers. So when you go through all this, you will automatically be able to be more confident. In study material also, there are test your understanding questions. In the back side, there are correct, incorrect, MCQs and general theoretical questions. That is equally part of completing a chapter. So please ensure that you're doing that, okay? So slowly you'll build that confidence that you are able to understand indirect questioning, okay? Then instances of unnecessary spending that do not align with financial properties, propriety is propriety audit, okay? So this we are finished. Very, very practical question, okay? So we are done with question number 5. Next. Now an NGO based in Kolkata is collecting significant donations for flood victims in Bihar. Okay. So victims kahan hai? Bihar. They are in Bihar. NGO kahan hai? Kolkata. The funds were distributed to various NGOs operating in Bihar to support relief. So Kolkata NGO collected all the donations. Then they transferred all the donations to various NGOs in Bihar. Okay. So one NGO collected money and they transferred the money to various NGOs in Bihar. You have been appointed as auditor for this NGO. So I have been appointed auditor of Kolkata NGO for the year in which it has collected and disbursed these donations. So I have collected the donations. Then I have given away these donations to various people, various NGOs. Draft an audit program to audit the receipt of donation and remittance. Now, you have to understand the question that it is not telling you to audit the whole NGO and create an audit program for the whole NGO and you'll write that we'll check reserve funds and earmarked funds and all that. No, it is specifically saying that you have to draft audit program for receipt of donations and remittance of the collect funds, which means I have to write points that how will I verify receipts of donation and how will I verify remittance of donation. So I don't have to write. This is the most common mistake made in this question by students, that you start writing audit program for the whole NGO like a charitable institution. No. Here it is specifically asking that write points for audit of donations and remittance. Okay. So remittance of donation means disbursement. So how do we check receipt? Receipt may first important thing is we will check internal control system. What is there? So as an auditor, I should first understand that what is your internal control system to even collect donations. That is how I'll understand first that how the NGO works. So the first important thing in my audit program is please tell me, okay, so if Anil is running an NGO, please tell me how do you collect, who is authorized, what kind of responsibility is there. So please tell me everything about your internal system regarding how you work. Okay. Then you will tell me who has custody of receipt books, which means If I am issuing any kind of donations, there is a receipt you give to the donor. Okay. So if I am giving any kind of donation to your NGO, you will give me a receipt that usually has all the this deduction details under ATG. So I will get all that details. So that receipt book custody should be in proper hands only. Okay. Then I will want, so all this will give me confidence that whether the receipts of donation is properly shown or not. Why am I checking all this? Why am I checking this, all this in receipts? So if I am auditor of an NGO and it is Anil's NGO, and Anil is saying, I collected 20 lakh rupees, ma'am. So I want to have confidence whether Anil has genuinely connected 20 lakhs, whether the NGO is working in such a way that they will not make mistakes or where the risk is very less. So I'm trying to understand that also. And of course, I'll do the vouching verification also. So internal control, I'll see who has the custody of the receipt books. Okay. Then I will check all the checks. I will see all the checks. So if the receipt book is there, it will mention that what check number was received and I can verify it. So how I can verify it? I can do bank reconciliation. Okay. To do bank reconciliation, there will also be cash. So इस point से आपके 3 point बन जाएंगे. With this point, you can remember 3 points. That I will check receipts of cash. Then I will check receipts of cash, receipt of checks, and I'll do bank reconciliation through this. So this will help you do the audit of receipts. And lastly, most important, foreign donations. The auditor will check in detail foreign donations, whether they are in compliance with all the rules and regulations. So if you remember, there was an act called as FCRA, Foreign Contribution Regulation Act. So if there is foreign donation, you have to become very alert, very careful that whether all the laws were followed or not. So how do we check receipts? We check receipts by seeing the internal control system, the custody of receipt books. These becomes both part of checking the system. So in both this, we are checking the system. Then we are checking check cash and bank reconciliation. Okay. And then we are seeing foreign donation is properly complied or not. So this is how we check the receipt of donation. Now let's see remittance of the donation. What to check? I have transferred the money to whom? What does it say? I've transferred to multiple NGO, 1 NGO, 2 NGO, 3 NGO, 4 NGO. Let's say I've transferred the money. So I am the NGO, I've transferred the money to 4 NGOs. Okay. So how do we check remittance of donation? So first I can see mode of sending. How have I sent this? Have I sent through proper checks? There could be checks. There could be demand drafts. So how have I sent the money? Okay. Second is confirming receipt of remittance. What does it mean? That I have actually sent the money. So either I would have sent them a mail, I would have sent them a letter, and they would have also sent me acknowledgement. Okay, we hereby acknowledge that we have received 5 lakh rupees from you on this date through this check number. So that is called as confirming receipt of remittance. So there should be some form of acknowledgement. There should be some form of acknowledgement that can confirm that whether the NGO that I sent the money has received the money or not. Then identity of the NGO. So suppose the NGO shows me, yeah, see ma'am, we have this email that we have received money from Gyan Ganga NGO. You have to confirm whether Gyan Ganga NGO actually exists or not. So whether this is genuine, check their address is genuine or not. Check their ATG registration number is genuine or not. So you have to see the money I have sent are to actual genuine NGOs because I have collected money to send it. So I have to ensure that the money I am sending is to correct people. Okay. Then direct confirmation. So auditor can directly send. Do you remember external confirmation, everyone? Do you remember external confirmation, SA 505? Same thing as an auditor, you can put in audit program for checking remittance, that you can do direct confirmation. You can send confirmation letters to the NGO to whom you have donated. Then donation utilization. The auditor has to check that whether the money actually was received by the poor victims of Bihar flood. Okay. You have to, as an auditor, check that whether the money was utilized for correct purpose. And how did you select this NGO? System of NGO selection. How did you select this NGO? Just because chacha mama phupe ka hai, so that is why you have selected? No. There should be a proper method in how these four NGOs were selected. So as an auditor, if I have to check remittance, what are the points I will check? What audit program I'll make? What audit program I'll make? That, okay, let's see what mode they have used, whether the recipient has sent any acknowledgement, whether the recipient is a genuine person, whether I can do any external direct confirmation with them, whether the donation was utilized correctly, and whether the NGO selected, how was it selected? Any doubt, anyone till now? This is a very good practical question. Very, very good practical question. I have taught you all the points. Any question till now, students? Okay. All right. So no questions are there. Let's move on to the next one. So PQ and Company Chartered Accountants have been appointed statutory auditors of multiplex cinema. So automatically we know that this is cinema audit question. Okay. The audit team started the audit and verified the ledger, other books of financial year 24-25. However, one of the team members is of the view that internal control mechanism of the company should also be verified. Can you guide the audit team regarding areas that will be covered in internal control mechanism? So it may look like that it is something that you have to think and do on your own, but in your book, there is a clear answer for this, that in case of cinema audit, the most important thing for which there should be proper internal control system is tickets. So we will check what are the points to be checked in internal control of tickets. The first thing is there should be printed tickets. Okay. There should be proper printed tickets. These printed tickets should be serially numbered. These printed tickets should be serially numbered. Okay. Then there should be number of tickets issued record. There should be record of number of tickets issued for each show. Each show and class. What is class? There can be executive, there can be recliner. So there should be proper details. Okay. Then there should be details of advance booking. Advance booking should have separate series of tickets so that you can identify whether it was an advance ticket or a normal ticket. And the inventory of tickets should be in safe custody. Okay. Custody of responsible official. If all this is good, it means my risk assessment on ticket sales will be good. See, it's very difficult for an auditor to actually see whether all the shows that are being shown, actually those many people were sitting in the show or not. Okay. So that is why we have to find a way to understand the system so that if we can rely on the system, we know that the probability of fraud and error are low. Okay. So how do we check the internal control system of tickets? We check whether printed tickets were there or not. If it is printed tickets, it should be properly serial numbered. There should be, so usually cinema halls have this show-wise reconciliation, whereas a show number of tickets issued and number of this money collected. So a reconciliation is prepared. So number of tickets issued for each show and class. Advance booking should have a proper separate series, and inventory of the ticket should be with a responsible official. So this, if you write, you'll get full marks. Areas that will be covered, verifying the internal control of CBD multiplex are entrance to the cinema hall is only through printed tickets. Tickets are serially numbered, bound into books. The number of tickets issued for each show and class are different through the numbers of same class or same show on same day run serially. That for advance booking, a separate series of tickets is issued. Inventory of tickets is kept with custody of a responsible official. That's it. All right. And now let's come to the next question. Just give me a minute. Let's come to the next question. Helping Hands Cooperative Society is working for the welfare of its members since 10 years. Government body observed that society has some idle funds during financial year, and considering the equity market's growth, it has decided to invest in blue chip funds, mutual funds. Decision brought a lot of fortune and society earned handsome return on investment made. Auditor of society, however, gave a qualified opinion. Management has hired you to guide where they went wrong. Give your comments regarding Section 32 of the Central Act. Now, this is a very important question. You should immediately be able to understand this is regarding restrictions on investments by cooperative society. Okay. So cooperative society is not allowed to invest the funds wherever they want. Okay. You cannot do that. So Section 32, which is given in your question itself. See, Section 32, what does it say? It says Section 32 of Central Act means Cooperative Society Act 1912. Okay. It says that if you have excess funds, you may invest only in the following things. Where can you invest? You can invest in a central or a state cooperative bank. Okay. You can invest that money in central or state cooperative bank, or in cooperative bank as may be approved in any other cooperative bank, if approved by a registrar. So there may be district cooperative banks also. So you can do that if they are approved by registrar on specific terms and conditions. Then where can you invest? You can invest in any securities that Section 20 of Indian Trust Act, Indian Trust Act 1882 allows. So जहां पे ट्रस्ट को अलाउड है पैसा इन्वेस्ट करना, वहां पे आपको अलाउड है. ओके, सो वेर एवर ट्रस्ट इज अलाउड, यू कैन ऑल्सो इन्वेस्ट मनी देयर. देन यू कैन इन्वेस्ट इन शेयर्स, सिक्योरिटी, bonds or debentures of other society, any other society with limited liability. And lastly, you are allowed to invest in any other money as permitted by central or state government. Okay. So where are you allowed to invest? This answer we have to remember as it is. Where are we allowed to invest if we are a cooperative society, if we have excess money? First, you remember banks. Okay. First two banks. Central bank central cooperative bank or state cooperative bank, or in any other cooperative bank if it is approved by registrar. Then you are allowed to invest in securities. But what securities? Securities that are allowed under Section 20 of Indian Trust Act, or share security bonds of any other society. And last, in any other money as may be permitted by central or state government. But why has he given the qualified opinion? Because you are not allowed to invest in blue chip funds. So here nowhere it's written that you can allow in blue chip mutual funds. Those are all private investments. They are riskier investments. Okay. So the money is not of society. The money is of the members. You cannot take risky investments in cooperative society. So, according to Section 32 of the Act, central or state cooperative, security specified under Section 20 of Indian Trust Act, share security bonds, debentures of any society with limited liability, cooperative bank other than state or central bank as approved by registrar, and any other monies permitted by central or state government. In the given case, Helping Hands Cooperative Society invested the funds in blue chip mutuals, due to which auditor gave qualified opinion. Helping Hands Cooperative Society should invest the funds as per Section 32 only, as investment in blue chip funds is not permissible. Okay. So this point is completed. Very important answer. Next. CAP was consulted by one of his friends. Friends kaun hai? Mr. Robin. Robin informed him that he wants to enter education sector and invest in one of the schools being operated in the city. The operations of the school will be managed by Robin only, and the proposed investment will be made once CAP confirms the revenue figures given to him by existing management of the school. CAP said that the main source of revenue of school is a fee. Obviously, what is the main source of revenue in school? Fees from students. What are the steps involved for the verification of fees collected? This is again there in your book, that how do we verify fees collected? Okay. Fees collected from students. How do we verify fees collected from students? So the first most important, I'll give you first some words to remember. There should be students fee register. And this should be verified with class register. Why? So that there is no omissions being made. Why? Student fee register will show 50 people in class 6A, but class register is showing 55 students in class 6A. So why are 5 students not paying? Okay. So 5 name missing in student fee register. So you have to check and reconcile student fee register for each month or each term with the class register, and you have to see the student name shown in the roll register, that is attendance register, and see the amount charged. So this will help us understand that whether the basic system, that the number of students are correctly shown or not. So, okay, this reconciliation is done. Then we have to check whether the fees received, we have to check with counterfoils. You must have issued some receipt. So the Xerox copy of it, you have seen now. People have this receipt in which one copy is with them, one copy is with the school. So fees receipt counterfoil should be there. If they have paid in cash book entry should be there. And this you have to trace in fees register. Okay. So you have to see whether fees is properly received. Next, you have to see that all the fees register columns, are properly carried forward. And here you have to see two things: arrears and advances. So to tally your fees receipt, you have to see arrears means the students who have not paid the money yet. Advances means someone who has paid for all the 3 terms together or all the 4 terms together. So as an auditor, you have to see that arrears and advances are properly seen and carried forward. And if arrears are there since long time, if they are written off, then it is as per proper sanctioning authority. There should be a proper authority who has allowed it to be written off. So what did we see till now? We saw that as an auditor, you are advising someone whether they should take over a school or not. They're telling you, please check the fees collected. So how am I checking? I'm first seeing that student fee, I'm reconciling with student class register. Then fees received, I'm checking that how many counterfoils are there, कैश बुक में क्या क्या एंट्री है, फी रजिस्टर में क्या क्या एंट्री है, उन सबको रिकंसाइल किया. फिर in fees register, I'm making sure that advances are there, they are properly carried forward, arrears are there, if they are written off, whether they are written off properly. Okay. Then fees एक तो मिलती है regularly, when the term is going on, you get regular fees. But at the time of admission, you pay something called as admission fees. So auditor has to check admission fees with proper admission slips. Admission slips are properly issued and they are properly sent to capital fund. They are properly sent to the capital fund unless management committee has decided that no, we don't want it to be in the capital fund. Okay. Then we have to see any kind of scholarships or concessions that have been given. So it is properly done as per the rules of the managing committee. Then if there are any fines and penalties collected, that also we have to check. And we have to see if any hostel rent dues are properly there and deposits are refunded. So first we divide the answer into three main things. What all we collect from students? We collect normal term fees. We collect admission fees. What all we collect from students? Term fees, admission fees. We collect fines and penalties. We collect hostel dormitory rent. So all these fees are properly checked by the auditor to give an answer to his friend. So let's see now. These are the steps involved in verification of fees. Check the name in student register with respective class register. Check fees received by comparing counterfoils with cash book and collections and fees register. Total up the various columns of fees register each month so that fees paid in advance is properly carried forward. Arrears that are irrecoverable have been properly written off under appropriate authority. Admission fees is properly against admission slips and they have been credited to capital fund unless managing committee has taken a decision to contrary. Free studentship, any concession given is properly authorized. Fines for late payment have been properly collected. And hostel dues are recovered before students' accounts were closed and their money for caution money is refunded. Caution money is like a deposit. So if you have seen any person getting a house on rent, they have to give some deposit, right? Same way in hostels, you might have to give caution money. Even if your rent is like 5,000 rupees per month for hostel, the school might take 20,000 rupees extra from you as deposit in case you do any damage to the hostel, like you broke some furniture or you broke some lights. So that is called as caution money. If you do nothing, they will refund the money to you. Okay. So that should be properly accounted. So the three main things that you need to check in fees is all the student fees collected through term fees, admission fees, late payment fees and penalties, hostel dues. Everyone clear with this answer? Okay. These are all practical points. You must have studied this chapter already. Okay. So you just have to ensure that you are properly breaking down the question to understand that what exactly are they asking from me. Next, you have been appointed as auditor of cooperative society. During the course of audit, you have seen some serious irregularity in the working of the society. Enumerate those special matters that you can report to the registrar. Again, a very, very important question. And in this, the language is very important. Okay, pay attention to the language. Why is this important? Because if you change those keywords, the answer will not be correct. You have to use the correct keywords. So serious irregularity are given for serious irregularity and you have to use those keywords. So if there are cases of personal profiteering, you will not use anything else. You'll use the language this only. If there are cases of personal profiteering which are detrimental to interest of society, which means a society is usually run by its managing committee. Okay, managing committee. So if they are running the society in such a way that उनका फायदा हो रहा है, members का नहीं. So personal profiteering if is happening and if it is detrimental means हानिकारक, harmful. Okay, it's harmful to the interest of society. Then that irregularity can be given by auditor directly to registrar. Second situation, detection of fraud. If you find any fraud with respect to expenses, purchases, property, and stores. Remember, expenses, purchases, property, and stores. If you have found any kind of fraud that has happened in the cooperative society that is related to expenses, purchases, properties, and stores, that you will directly report to registrar. Obviously, any kind of fraud you have to obviously report. Third thing you have to report, cases of mismanagement. Mismanagement. What does mismanagement means? It means it is not that fraud is happening or profiteering is happening, but suppose our bylaws say that managing committee has to meet every once in a month, but they are not meeting once in a month. Or there is a requirement that you have to give at least 60 days of notice before you can call a meeting with members, but they are giving only 1 week notice. That is called as mismanagement. Okay. So if there are cases of mismanagement when they are against cooperative principles, then you have to report it to the registrar. Fourth important thing. Now this is a very specific. If you are an urban cooperative bank and you are giving money, okay? And if you are giving disproportionate, what kind of advances? Disproportionate advances. Please see all the keywords. Disproportionate advances to vested interest groups, which means you are giving, so you are an urban cooperative bank, you are giving advances. So I have come to you, I am director's rishtedar, relative. I'm telling you, just give me personal loan of 10 lakh rupees. I can't give you any security. Okay, beta, take 10 lakh rupees. That is called as disproportionate advances. My salary is 10,000 rupees per month. So how will I pay off this loan of 10 lakh rupees? So that is called as disproportionate advances to vested interest groups such as relatives, okay, such as relatives of the directors. Plus there is deliberate negligence. What is there? There is deliberate negligence. And this leads to reckless advancing. Means giving money left, right, and center. Here, you take 5 lakh, you take 10 lakh, you take 50 lakhs. That is called as reckless advancing. So, if the management is not taking proper security and proper credit, proper safeguards to judge the credit worthiness, that is called as reckless advancing. So, that auditor can report. So, what things auditor can report directly to the registrar? that personal profiteering, cases of personal profiteering by members of managing committee that are detrimental to the interest of society, detection of fraud that related to purchases, expenses, property or stores, cases of mismanagement like they're working against the cooperative principles, and in case of urban cooperative banks, disproportionate advances are being given to vested interest groups, which is showing deliberate negligence and reckless advancing without properly taking adequate security or checking the credit worthiness. So Anil is asking, vested interest groups means like we're obligated to pay, not obligated. Vested means some kind of personal agenda is there of that group to get money. Is that clear? Vested interest groups. That is why I told you that directors of the relatives of the management. Okay. So they have approach, they have access, they have reference, and they think they can go away with anything or they can get away with anything. So that is why they are called as vested interest groups. So this answer again, very, very important. Now we are on the last question of this chapter. P Financial Services is a leasing and hire purchase company. You are an auditor of PFSL. You are in the process of examining financial lease agreements executed by them for equipment given on lease. Which point shall be noted by you while examining a particular finance lease agreement entered by PFSL? So again, we have to only write points that what do we check in a lease agreement? What do we check in a lease agreement? We check who is the lessor, who is the lessee, what equipment is given, where is the location where the equipment will be installed, what is the amount of tenure of lease, date of payment, late charges, deposits, advances, whether the equipment shall be returned to the lessor on termination and the cost shall be borne, whether the agreement prohibits lessor from subletting, okay, subletting and authorize the lessor to do so. So we are going to study the lease agreement for the following things. The things are, we will check whether description of lessor, who is the lessor, who is the lessee, what is the equipment, where will it be installed, for how much long the lease will be there, 10 years, 15 years, 20 years, when will the date, what will be the date of payment, 1st of every month, 5th of every month, 10th of every month, what will be the late charges, what will be the deposits, how much can advances will be there, whether equipment shall be returned on termination or not, and who will bear the cost. And agreement prohibits the lessee from subletting. Subletting means I have given to you, you cannot give it to someone else. So all these points will be checked in a lease agreement. So here we are done with chapter number 9. This question bank has covered almost every important thing. It has given you an overview of majority of the topics. Okay. So we have covered government audit, we have covered LLP audit, we have covered cinema audit, we have covered donations, NGOs we have covered today, uh, education institution, that is school. We have obviously covered cooperative society, multi-state cooperative society. So a lot of leasing company has also been covered. So we have covered a lot of quick revision. Within 1 hour, we have been able to do so much revision of this very, very bulky big chapter. Okay. So we will come back after 10 minutes. So it's around 8:20. We'll be back by 8:30. We'll take some break now. Okay. Hello students. So we are back and we have just completed chapter number 9 and we are going to start with chapter number 11 revision. Okay. Very different compared to chapter number 9 and extremely important. Your subject's name is auditing and ethics. So while all other chapters are about auditing, chapter number 11 is dedicated to that second part, that is ethics, which are the core foundation of our profession. Okay. So let's start with this chapter number 11 questions. Almost all the important points of the chapter will be covered in these questions. Let's go through it. Sigma Limited has approached CGK and Associates to appoint them as their auditor for a period of 5 years in accordance with the provision of Companies Act. All good till now. The prospective client company is new. This is the first time. SQC requires that a firm, before accepting an engagement, should inquire vital information about the client, which helps the firm to decide the integrity of the client. Apart from integrity, obtaining such vital information about client is helpful to audit firm in deciding which other matters. What matters should be considered by audit firm with regard to integrity of the client. So this gives you a very important ethical point that जो आए उसका काम नहीं करना है. It is not like that any client is coming, you also come, I'll do your audit also, I'll do your audit also. No. It lays down a principal foundation that take a moment, pause, and decide whether this person should be my client. Whether can I have basic trust on a person who's supposed to be my client. Because when we start audit, we don't have to presume fraud and error. So we have to start audit that whether can we have this person as a client or not. So take a pause and decide this. So we have to check 3 basic things, okay? Integrity of client, then our own competence. It means we have to check our own competence, which means if I am going to accept this client, do I have people? Do I have infrastructure? Do I have time to do this work? Okay. So I have to check my own capacity to execute this assignment or engagement. And then whether I can ethically, okay. Sorry. One second. Oh. So whether the ethical requirements are satisfied or not. Whether ethical requirements are satisfied or not. So these are the 3 things we need to check before acceptance, not after. Before acceptance of a new client. Now the question is asking you, how do we check integrity? We have to check these 3 things before acceptance: integrity, competence, हमारी competence, okay? Integrity किसकी? Client की. Integrity client की, competence हमारी. That whether do we have capability, time and resources to perform this engagement. And we have to check compliance with all the ethical requirements, okay? So how do we check integrity of someone? So let's say Kavya has come to me as a client, okay? So I want to see whether Kavya, so Kavya is saying, my company is there, madam. What is the company's name? Sigma Limited. My company's name is Sigma Limited, madam. I want you to be my auditor. So I will see what is the reputation of your business. Reputation of business and business owners, their key management, their related party, their TCWG. So I'll try to understand and gather some market information that इनकी क्या reputation है, कैसी reputation इनके business की, इनके business के owners की, business के key management, business related parties, and business TCWG. I'll try to understand what reputation do they have, what knowledge about their reputation I can get. Okay, their reputation is very good. But what business do they do? What is the nature of clients' operations? Okay, what is the nature of clients' operation? What kind of business practices they adopt? Are the business practices, which means the way they are doing business, very, very problematic? So this will help you judge the people who are running the business. Okay. Then you have to get some information regarding attitude of principal owners, key management, TCWG towards accounting standards, internal control environment. So how can we judge that? I'll give you a small example. Suppose I told that Kavya has come as my client, okay? So Kavya is sitting in front of me and I say, Sir, आपके यहाँ, madam, आपके यहाँ accountant कितना पढ़ा लिखा है? And she says, how I'm asking her, how educated is your accountant? She said, accountant what, madam? We are three sisters. We write accounts on our own whenever is needed. Now should we do business or worry about all these things? So if Kavya replies like this to me, what does it tell me? Is she serious about accounts? Is she serious about following good accounting standards? Is she serious about good internal control system? No. So this should give me red flag. It should create red flag for me that no, their attitude towards accounting standards and internal control system is very negative, which means I have to be careful before I accept these people's work. Okay. So if the attitude is very, very negative or casual towards accounting standards or internal control, then we can, so that is how we can judge the integrity of the client. Then they are very aggressive towards maintaining low fees for firm. They are very aggressive. So let's say Kavya is very aggressive. Ma'am, you do this work in 20,000 rupees. Ma'am, you just do now. There's nothing much in our company. You do this work for 20,000. Okay, 21,000. Now let's complete the work. So if someone is negotiating so much, so aggressively with me to keep the fees very, very low, that should also be a red flag, which means they don't care about good audit being done. They just want the fees to be very, very low. Okay, if they are giving any indication regarding any inappropriate limitation on scope of work, which means when I am sitting with Kavya, there itself she's saying, data से आप क्या बात करेंगे? हम आपको सब दे देंगे, आप उनसे बात मत कीजिएगा. So right there itself, they are saying that you don't contact our data. You don't contact our data. What is the need, madam? We'll give you all the details. So now itself, they are giving indications that if I would want to send external confirmation under SA 505 to data, these people will create problem, which means again, I am doubting their integrity. Then if there is any indication that they are involved in money laundering or other criminal activities. So if in conversation I come to know that she has a personal bank account in Panama or any kind of tax haven countries, that should automatically give me some kind of indication that she might be involved or the company might be involved in money laundering. What if I've come to know that she is director in 10 other companies and those 10 companies are in the same address, same registered address? That can also be an indication that some form of money laundering or criminal activity is going on. Then ask for reason of proposed appointment, why are you wanting to appoint me and you don't want to reappoint non-reappointment of previous firm? So I asked them, Kavya ji, why do you want me as your auditor? Your previous auditor firm can be reappointed after 5 years. They are saying, no, madam, they irritate us too much. They ask, this also you give, this also you give, this also you give, this also you give. And last time they gave us qualified report, madam. That's why we don't want them. Is this a good excuse? Is this a good justification to remove someone? Which means if you also ask for details, if you also want to give qualified report, they will create problem for you. So if your client is showing all these indications, then you should not accept them as a client. So how do we check integrity of a client? So here two things about business. Here two things about their aggressiveness. Then two things about indication. And fourth is why me? Why not previous auditor? Okay. So what are the points? 2 points related to business, that whether the reputation of the business and the key owners, management, principal owners, key management, related party, TCWG, nature of the client's information, what kind of the work they do, what kind of business practice they follow. Then aggressiveness or attitude of the owners, KMP, TCWG, and their aggressiveness towards accounting standards and internal control. Aggressiveness of them towards maintaining low fees. Any indication, so that's why this became indication regarding they are putting any inappropriate limitation on the scope of work, any indication that they are involved in money laundering or other criminal activities, and reason for proposed appointment and non-reappointment of the previous auditor. Okay, very important answer. I have shown you. How do you remember it? First 2 points about business. Next 2 points about aggressiveness. Next 2 points about indication and why me. Like that you can remember. This is to remember. This is the trick to remember. Okay. Ma'am, all these are general points, right? Or else these are defined in some standard because we have to show the reason along with respective standard. Otherwise, client may raise. So you are not telling client that I am assessing you. Your job is that I need to assess the client and their integrity. Okay, these are all part of SA 220 and SQC 1. Okay, so to check integrity, competence, ethical requirements, these are all you have to check integrity. But how do you check integrity? These are the ways you can. You don't have to tell the client, I'm checking your integrity as per this essay. No, these are some things you know through conversation. This is an internal process. Okay. A client approaches you, you do this in the back end with your team, and then you can just give them an answer. You don't have to tell them, I am assessing you as per this essay. Is that clear, Anil? That you can just say that at this point, that after accepting, I mean, ma'am, if the client raises a point, why did you deny or reject? You can just tell any reason. You can tell them, sir, I cannot do the job right now. It is not possible for me to accept your assignment right now. That's it. I don't have to give them that as per this essay, I cannot accept your job. Unless it's like a law wherein you can't accept their job because you have some shareholding, you have some indebtedness. That time you have to give reason. But this point, you don't have to give reason to them. Okay. You cannot tell them you are doing money laundering. That is why I'm not accepting you. Not like that. But when it is legal, that time you can give them explanation. Okay. At this point, you can just say, at this point, we do not have time and resources to accept your work. Thank you so much. Okay. All right. Next. Deepa Limited initially requested an audit engagement for financial year 23-24. However, midway through the audit process, the management claims that they are unable to provide complete supporting documentation for a significant portion of receivables. As a result, the management asked the auditor to change the audit engagement to a review engagement, arguing that it would prevent the issuance of qualified opinion. The auditor is now facing challenge in determining whether this change is justified or not. Comment with respect to relevant essay. So this is regarding, first we have to identify essay 210, agreeing to the terms of audit engagement. Now what does it say? It says that we have to check all the preconditions of an audit before acceptance. So suppose before acceptance we checked everything. Everything was okay. We started the work. Now in between, after I have started the work, they are coming and asking me to change the scope of my work. Okay. So there are, you have to evaluate why they are asking. Okay. It is not a clear thing that they can't ask. You have to ask why they are asking. What is the reason this thing is asked? Is it necessary because of law, or is it necessary because management wants it? If you think so, the essay 200 tells that if you as an auditor think, okay, this is justified, then you can even change an audit engagement even after starting. But if you think that this is not correct, what they're asking me to do is incorrect, it changes or it affects my ability to give reasonable assurance, then you can reject also. Okay, so what does this say? As per 210, agreeing to the terms of audit engagement, a request from the entity for the auditor to change the terms of engagement may be due to, may result from one, change in circumstances affecting the need. Second, because of a misunderstanding. Or third, due to a restriction on the scope of audit engagement. So what are the three reasons someone can ask you to change any terms of engagement? Change in circumstance, due to a misunderstanding, or restriction on the scope of audit engagement, whether imposed by management or caused by other circumstances. The auditor has to consider the justification given for request. So essay 210 says, आप खुद समझदार हो, आप अपना डिसीजन लो. Essay 210 puts the responsibility on the auditor. Okay, it puts the responsibility on the auditor that you decide that as per this situation, do you think you should accept the change? And how will it affect particularly implications of a restriction on scope of work? A change in circumstance that affects entity's requirement or a misunderstanding, change in circumstance or a misunderstanding, may be considered a reasonable basis because the circumstances have changed. There is some misunderstanding. That is why they're asking you. But if a change is not reasonable if it relates to information that is incorrect, incomplete, or unsatisfactory. An example might be where auditor is unable to obtain sufficient appropriate evidence. So entity is asking the engagement to be changed to review engagement to avoid qualified or disclaimer. Hence, Deepa Limited's request for audit engagement to be changed to review engagement to avoid qualified opinion is not reasonable. So, in what situation can an auditor change the audit engagement after you have started the audit? Only if he finds the request to be reasonable. There are three reasons, remember? Three reasons. Change in circumstance, any misunderstanding is there, or restriction on scope of audit engagement. So there's one question. Ma'am, for the above question, if it is for a listed company after getting appointed by board of directors or members, accordingly, how will that work out? And how will auditor reject? So even if you are appointed by a company or a listed company, the board of directors don't appoint you. They are appointed by AGM, firstly, Anil. Okay, you are not appointed by board of directors. You are appointed by members in AGM. So when the members appoint you in AGM, an appointment letter is sent to you. You are not directly appointed. An appointment letter is sent to you. And then you get some period of time to accept it or reject it. Is that clear, Anil? You get time to accept it and reject. You don't even have to give reasons. You will get an appointment letter and you can mention that I cannot accept this assignment. If you want to give reasons, you can give reasons. If it's legally because of some legal restriction that your relative is involved as officer or employee, or if you have given guarantee for someone's indebtedness, you can mention that. Otherwise, if you don't want to accept it due to other indicators, you can just mention that currently I'm not in a position to accept it. Is that clear? Okay. So this answer we are done. Okay. So SA 210 makes it very clear that changing the scope of engagement after starting the work just so that you can avoid qualified opinion is incorrect. It's not reasonable. So auditor should reject this request and continue his work. Okay. Now let's talk about familiarity threats. So before I talk about familiarity threats, please let's revise threats to independence. What are the different threats to independence? They are self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. Okay, intimidation threat, familiarity threat, advocacy threat, self-review threat, and self-interest threat. So there are 5 types of threats that have been globally recognized as threats to independence of an auditor. So as an auditor, I am supposed to be independent of my client. What can affect and what can cause trouble to my independence are these 5 threats. Self-interest threat, where I'm expecting some monetary gain, and because of my own selfish interest, client is not pressurizing me. Because of my own selfish interest, I'm unable to be independent. Self-review threat, which means I am checking something that I have only created. So if I have created internal control system for the client, then I am only checking and doing the audit. That is called as self-review threat. Advocacy threat, which means I am representing client in different kind of litigation forums like arbitration, like let's say ITAT, high courts. So if I'm doing all that, I'm creating advocacy threat because I'm advocating for the client. Familiarity threat is what we'll study now, and intimidation threat, which means any kind of pressure from the client to do the wrong work. Otherwise, they are threatening to remove us from the assignment. All these are called as intimidation threats. So I'm doing this in very quick revision style. So that's why I'm not going in too much detail of each threats. So familiarity threats. So I'm doing all this in assumption that आपने घर पे पढ़ा है. Okay, you have already studied this, and we are going through a revision of it. Okay. Familiarity threats are self-evident and occur when auditors form relationship with clients where they end up being too sympathetic to clients' interest. Explain. What does this mean? Let's understand this. Suppose there is a proprietorship firm, okay? That proprietorship firm, I have been auditor for 20 years. They are not my relative. I don't have any indebtedness. I have nothing. I don't have actually any legal thing with them. But because I know them for 15, 20 years, I develop a certain sympathetic friendship with them that can cause trouble, which means because I know them for 20 years, because they have been my client for 20 years, I will hesitate to put any comment in their audit report which can affect their business or which can affect them. That is a threat created due to proximity or familiarity with the client. If my client every year gives me a big birthday party, they give me a lot of gifts, they invite me to their family retreats, all these things can create familiarity threats. Okay. So familiarity threats are self-evident. This is same from the question. They can occur in many ways, including if you are close relative of audit team working in a senior position or in the client company. Okay. So my team is of 4 people, and out of the 4 people, one of the team members relative is working in the company. So that can create familiarity threat. So you remove that audit team member from this engagement team. Former partner of the audit firm being director or senior employee of the client. Okay. So, uh, let's say Anil used to be partner in my firm, but now he has left CA, left practice and gotten into industry. And he has joined this company and he is working there as a CFO. So if you were previously my partner and now you have become CFO in a company, do you think I should be auditor of that company? So that causes familiarity threat. Then long association between auditors and their clients. This I told you an example that in the proprietorship and all, you can be auditor for 20 years, 25 years. Or acceptance of gifts and hospitality from client companies, directors and its employees. All this can create familiarity threat. Provisions in Companies Act regarding rotation is to address these threats only. So, do you know that rotation of auditor was not there in Companies Act 1956? When we studied Companies Act 1956, the old act, there was no rotation. Every year, you have to do the auditor appointment, and the same person can be auditor for 15, 20 years. Then the government observed that familiarity threat was created, and hence rotation clause was introduced in Companies Act 2013, where if you are single, then you can be auditor for 5 years, and then you have a cooling period. And if you are a firm, you can be auditors for 2 consecutive 5 years, and then you have a cooling period. So this was introduced to address which threat? Familiarity threat. Okay. Next. Okay. CA Paras has accepted audit of financial statements of an entity. Okay. According to standards of auditing, the auditor is required to send an audit engagement letter, SA 210. What are the key areas that should be included in audit engagement letter? Under what circumstances is auditor not required to require the terms of engagement in such a written agreement? Okay, so what does an audit engagement letter include? Very simple it is. Any audit engagement letter can have lot of points, but the key points, so here we'll write key points or key areas are: first, obviously, objective, why we are doing this audit and what can we do in this audit. Okay, boundary line establish. So, objective and scope of the audit. Then I have to include responsibilities of auditor and responsibilities of management. What are the responsibility of auditor? What are the responsibility of management? Then, this is actually a third point. Then, what are the AFRF that is applicable in the financial statements? This should be clear that this entity is covered by Companies Act. Okay. Next, what is the expected form and content of reports? Do you want me to issue regular reports? What kind of format you want the report to be in? All these things should be mentioned in the audit engagement letter. So what are the key areas in an audit engagement letter? Objective and scope of audit, responsibilities of auditor, responsibilities of management, where what is the AFRF that is applicable on the financial statements, and expected form and content. Now, without seeing, let's try to say along with me if you're sitting properly. So what are the key areas? The key areas are that we should have objective and scope of audit, responsibilities of auditor, responsibilities of management, whether AFRF, proper identification of AFRF for financial statements, and expected form and content of reporting. Okay. So these are the key areas to be included. If law or regulation prescribes in sufficient detail the terms of audit engagement, the auditor need not record them in a written agreement, except for the fact that law or regulation applies and management acknowledges and understands its responsibility. So if you are doing audit under some law, then you don't have to give each detail that what I can check, what I can't check. Then you can just mention that the audit and the scope of the audit will be as per Companies Act or will be as per Banking Regulation Act, and the management should send an acknowledgement that they accept it. Okay. Next, Truthful Products Limited Private Limited is engaged in trading stationery items. Okay, they are in trading, not manufacturing. During the year 2023-24, there was a huge fire in one storage location of the company, resulting in loss of inventories of rupees 5 crores. As a result, the operations of the company were badly affected for about 2 months. Unfortunately, the insurance claim of the company was rejected due to certain defects in policy issued, and loss was properly fully booked by the company in 2023-24 itself. There's no change in the nature of business of the company in relation to last year. The draft financial statements are as below. So revenue from operations previous year 80, this year 100, net profit 6. Here they are saying that इस साल तो फायर हुई है, इन्वेंट्री भी जल गई, क्लेम भी नहीं मिला. फिर भी how is all the figures on financial statement showing so well? How is it possible? CAD, who has been statutory auditor for past 3 years, has decided to rely upon same test of details like previous year. Oh, you are using the same things like last year. What is lacking on auditor's part? Skepticism. You are just blindly following last year's methods when you know this year fire has happened. You know that insurance company rejected the claim, 5 crore का loss था, और फिर भी paper पे sales are growing. Even net profit percentage, this is around 7.5%. This is 10%. So even your net profit percentage is growing. How? So you have to change your method of auditing. You can't use last year's method of test of details and apply same in current year. You have to do more analytical procedures. You have to do more different procedures than compared to last year. So this is a fully drafting question. This you have to fully understand and apply your knowledge and understanding of auditing to write this answer. Okay, it's a very, very good question. Maintaining professional skepticism throughout audit is necessary if auditor wants to reduce risk of overlooking unusual circumstances and using inappropriate assumptions in determining nature, timing, and extent of audit procedures. What does professional skepticism do? One, it avoids it happening that you will overlook any unusual circumstance. And you will not use any inappropriate assumptions if you are being professionally skeptical. In the given situation, revenue from operations of the company has increased from 80 crores to 100 crores, despite operations being affected by fire for about 2 months. Further, despite loss of inventories of 5 crores, financial statement reflect increase in net profit from 7.5% to 10% in 2023-24. It means the approach of CAD lacks professional skepticism. This is a fully analysis-based question. Very, very good question. In spite of these unusual circumstances, the auditor has decided to rely upon test of details of previous years. The nature and extent of audit procedures need to be altered considering change in circumstances. You cannot use the same procedures as last year. You have to change it as per the current situation. You have to include analytical procedures to analyze variations. Seek explanations from management. If you think there is doubt about reliability of information, see if there is indications of fraud. See if you need to modify or put additions in audit procedure to resolve it. CAD, the auditor of listed company, shall document the overall audit strategy, audit plan, significant changes. All this needs to be made properly, and hence the approach of CAD is not correct. All right. So here the auditor, first you'll mention what skepticism is, what happened in the company, and what should an auditor do. Okay. What should an auditor do? What concept, which means this is what is lacking. What is lacking? Professional skepticism. case and what to do now. What should CAD should have done? Okay, he should have changed and altered his procedures. That's it. Next. CA Rohit is conducting audit of Taste Limited, a food production company, for the last 2 years. Okay. Before commencing the audit for the year, he observed that company has undergone a major shift in its product line by expanding its pharmaceuticals. Besides this, the company is now subject to new regulatory reporting requirements. These developments were not present at the time of accepting initial audit engagement. CA Rohit is of the view there is no need to issue a new audit engagement letter. Which question is this? Essay number 210. Essay number 210. So, what does essay 210 say? So, if you are having recurring audit engagements, recurring means you are already auditor for 2 years. Okay. So you are continuing audit with the same firm every year. For at least 5 years, you will be auditor. So if you are in recurring audit engagement, you must have sent audit engagement letter in the first year when you accepted the assignment. So do you have to send audit engagement letter every year again and again? So the primary answer is it depends. So the essay says that usually you are not required. But if there are certain circumstances, which means you assess whether circumstances require a new engagement letter, whether the circumstances require us to send engagement letter again. So how can you decide it? Factors that can affect whether to issue a new engagement letter. First, any indication that management entity misunderstands scope and objective of audit. So if in previous years you have felt that whenever you ask them for something, they argue with you, they misinterpret the audit engagement letter. So if you think that they are misunderstanding some language, some paragraph in the previous engagement letter, send a new one, a clear one, so that there is no misunderstanding between you and management. That time you can send a new engagement letter. Next, if there is any revision, revised, or any special terms. So if there is any revision, you can send a new engagement letter. Now, third, you remember this group point, change. कुछ भी बदला है तो नया engagement letter भेजो. Any change, send new engagement letter. What kind of change? Change in senior management. Management बदल गई. Owners बदल गए. Business बदल गया. Law बदल गए. AFRF बदल गया. या फिर अदर रिपोर्टिंग रिस्पॉन्सिबिलिटीज बदल गई. When will you send a new engagement letter? What are the factors that affect the decision whether we need to send a new engagement letter? या तो indication है, any indication that there is some misunderstanding. When you want to revise something, or if there is change in management, ownership, business means nature and size, लीगल और रेगुलेटरी फैक्टर्स, AFRF बदल गया, अदर रिपोर्टिंग रिक्वायरमेंट्स बदल गई. So remember it like this. You will easily remember. Very, very scoring question. Okay, very scoring topic. So as usual, essay 210. I have already sent you. The auditor may decide not to send a new audit engagement letter. However, following factors may make it appropriate. Any indication that entity misunderstands, revision, change in senior management, ownership, nature or size of business, regulatory requirements, financial reporting framework, other reporting requirements. In the given case, Taste Limited, a food production company, has undergone a major shift in its product line, the company is also subjected to new regulatory requirements, then it is appropriate to revise the terms of engagement as a 210. The view of Rohit regarding no need to issue is not correct. CA Rohit is required to send and revise new engagement letter. Okay. So here we are done with this answer also. Next question. CA Sudhakar has been appointed as auditor of AMRO Limited, AMRO Limited. Okay. Before accepting, he learns that his cousin, okay, who held shares in the company and has recently passed away without children, named him as nominee for these shares, which have huge value. Okay, so you have gotten, CA Sudhakar has gotten some shares in his name now. After holding such value, although holding such shares through a distant relative does not violate legal provisions or affect his independence, this unexpected inheritance places him in a dilemma. Advise CA Sudhakar on how he should deal with this situation and safeguard his independence. This is the question. Okay. So there is a specific, very, very specific answer that how does an auditor safeguard, which means how do you protect your own independence? Now see this. For public to have confidence in audit, for public to have any confidence in audit, an auditor should be also and should appear also to be independent. Okay. For public to have any trust or confidence in audit report, the auditor should be and the auditor should also appear to be independent. Therefore, before taking any work, before you take any work, you have to consider threats of independence. You have to consider threats of independence. And if these threats exist, either you desist from the task, means you don't take up that task, or eliminate the threat. Either you eliminate the threat or don't accept the threat. Okay. Or at least reduce threat to acceptable level. Reduce threat to acceptable level. And if unable to safeguard, then not accept the assignment. Very simple thing. Very simple. What does it say? For public to have confidence, the auditor should be and appear. होना भी चाहिए और दिखना भी चाहिए. Okay? You should be and appear to be independent. So therefore, before you take any work, you see three things. Whether threat of independence exists and you can desist from the task. If it exists, don't take up the task. Eliminate the threat, whether you can remove the threat, or at least if you can reduce the threat to an acceptable level. But if you are unable to provide any safeguard, then please don't accept the work. What happens in this case? CA Sudhakar should choose either to sell the shares and then become the auditor, and if you want to hold the shares, then he has to reject the appointment. So in the given situation, holding shares by CA Sudhakar involves financial interest in the company and is in what threat? It is self-interest threat. Though he has come to hold shares due to nomination before accepting the appointment, chartered accountants have a responsibility to remain independent by taking into account the context in which they practice, the threats to independence and safeguards. Safeguards are actions that individually or combination takes effectively to reduce threats. To address this issue, the following guiding principles is applied. For public to have confidence in quality of audit, it is essential that auditors should always be and appear to be independent. Before taking any work, you must conscientiously, means cautiously, properly, logically consider whether it involves threats. If the threat exists, auditor should desist from the task or eliminate the threat, or at least put safeguards to reduce the threat to acceptable level. All such safeguards should be properly recorded as evidence. If the auditor is unable to implement any safeguards, then he must not accept. Considering the above, holding of shares of the same company in which he is offered appointment is a threat. Therefore, CA Sudhakar should take steps to eliminate the threat by selling the shares immediately before accepting appointment, or in absence, he should not accept the appointment. Very, very simple. Remember, safeguards to independence को याद करने का बहुत ही easy, this small flow chart. Public should have confidence in audit. Auditor should be and appear to be independent. Before taking any work, consider threats to independence exist or not. If exist, desist from task, eliminate the threat, or at least reduce the threat. If you are unable to provide safeguard, not accept the work. Okay? In very proper flow, you can remember this answer. Next. Luck Limited, a mid-sized manufacturing company, has approached CAS, a qualified chartered accountant, to conduct the audit for financial year ended 31st March 2025. The company requests CAS to give acceptance for audit so that audit can be commenced within time. Okay. They have approached you. Now, as per SE 210, how will the auditor establish what preconditions are there? This is again a very, very direct question, direct answer. Preconditions of an audit. Extremely important. You should always remember it. These are some of the most important and basic classic questions. What are preconditions of an audit? This also I'll tell you in a small flowchart that you will be able to remember. First point is whether FRF is acceptable. The first precondition to an audit is the way they have made their financial statements, whether that framework under which they have made their statements is acceptable or not. Second, you have to see whether you can obtain agreement of management regarding whether they acknowledge and understand responsibility. They acknowledge and understand responsibility for what? Three things, okay? They acknowledge and understand that the responsibility that financial statements should be made as per FRF. They acknowledge and understand the responsibility that financial statements should be made as per FRF. Second point is whether the management agrees that internal control systems should be made as necessary. They acknowledge and understand the responsibility that internal control system is made as necessary. And the third important thing is management understands that they have certain responsibilities towards auditor. What responsibilities do they have towards the auditor? They will give them access to all information that is necessary, okay? That is relevant. Then they will give access to any additional information that the auditor may require. So if the auditor comes to management with a follow-up question, it is your responsibility to provide that additional information. And the third responsibility they have towards auditor, that they will give unrestricted access to persons within the entity. Okay, So it's not talking about people outside the entity. It's talking about that management has a responsibility to give unrestricted access to persons within the entity, which means whether it is a labor, to a manager, to a supervisor, to an accounts department person, to a sales department person, if you are within the entity, I should be able to give access. If these preconditions are satisfied, then only I'll accept your audit. So what are the preconditions? Just remember in this way. First is whether your FRF is acceptable. Then whether you have to obtain agreement from the management that it acknowledges and it understands that they have three responsibilities. What are those three responsibilities? That financial statement is made as per financial reporting framework. The internal control system has been established as necessary, and they have third responsibility towards auditor, that they will give access to auditor to all information that is relevant, any additional information that the auditor may require, and unrestricted access to persons within the entity. If these preconditions are satisfied, according to which SA number 210. Okay. If these preconditions are satisfied, then only I'll accept your engagement. So a very, very important and direct question you get. In question, there will be word precondition. Okay. So whenever precondition of an audit, immediately you should think about FRF acceptable, management accepts responsibility for FI. Financial statement is as per FRF, internal control is as necessary, and auditor has access to all information, any additional information, and unrestricted access to people within the entity. Okay. So this we have done very properly. Preconditions for an audit should be present. FRF is acceptable. Agreement from management that it acknowledges and understands its responsibility, that financial statements are prepared as per AFRF. Internal control is considered, or management considered internal control as necessary to ensure that financial statements are free from material misstatement, and to provide the auditor with access, additional information, unrestricted access to persons within the entity. Okay, so this we have repeated 2-3 times. I have repeated it so that you remember it. Okay. Next question. Messrs. ABC and Company have been appointed as statutory auditor of DEF Limited, which is a listed company. Okay. For the financial year 2024-25. All right. CAX is a seasoned means a very experienced chartered accountant with over 15 years of experience, and he has been made as engagement partner. CAX is engagement partner. CAX takes responsibility for maintaining overall quality of this audit engagement as per SA 220. What do the actions of engagement partner and appropriate messages to other members in taking responsibility emphasize? So what does it emphasize? Which means that if I am the engagement partner, what are my responsibilities towards the audit as a leader? So here we are talking about responsibility of a leader. So that is why this question is regarding leadership responsibility. Leadership responsibility of an engagement partner as per SA 220. Okay. What is the engagement partner's leadership? Now understand this. Suppose all of you are new articles. Okay. All of you are new articles. You have come in my firm and I am your engagement partner. I am taking you to your first audit. Now, suppose you are very scared of me. And because of that, you are not able to ask me questions. Is that good leadership? Is that good leadership? If you are going, I'm sending you off to a client's place and you are unable to call me or send me messages or discuss with me any problems you face during audit, is that good leadership? No. If I tell you this client is very important, you don't ask too much, you don't create trouble with the client, we should not lose this client. So if I make you uncomfortable, if I tell you that be careful, don't irritate the client, that is not a good indication. So it is the leader's responsibility to create good example. So as a leader, what are the points I'll tell? I'll tell that whenever we are performing audit, we will comply, whenever we are performing any audit, we will comply with all the professional standards. It is my responsibility as a leader to never say no, standards chalta hai, nahi ye follow karenge. No, I have to tell that we will follow seriously all the professional standards, all the regulatory and legal requirements. So whose duty it is? So when I am also teaching you, I'm telling you, no, don't take this wrongly. We have to take standards of auditing very seriously. Okay. So it is responsibility of the leader to tell you the importance of following all the standards and regulatory and legal requirements. It is also my duty to tell you about firms' quality control policies and procedures. What does this mean? So I told you, you all are new. You all are going for first time audit. So it is my responsibility to tell that, Anil, I am giving you this form. Every day, whatever work you do, you have to maintain a work diary and you have to tell me exactly when did you go to the client's place, what time you left from the client's place, who all did you discuss things with, what all did you check. This is my firm's policy. Please follow it. So who will create this leadership? It is the job of the engagement partner to tell you that how my firm works. Next, it is leader's responsibility to tell you that we will issue correct audit reports. We will issue audit reports that are appropriate. It is my responsibility to tell you that if we have to issue adverse, we will issue adverse. If we have to issue qualified, we will issue qualified. There's nothing to fear. There's no worry. If you think there is problem, there is fraud, tell me, we'll report it. That is the confidence the leader has to develop, that you can issue audit reports that are appropriate. Don't worry about it. Then it is the job of the leader, the engagement partner, to create confidence in engagement teams' ability to raise concerns without fear of reprisals. So, if you are calling to ask me, or if you are asking me anything, and if I scold you, will you be comfortable to ask me next time? No, you won't be comfortable. So the leadership responsibility is that are you able to raise your concerns without fearing that I will scold you or create any backlash? That is a very important part of creating good leadership. And lastly, the fact that quality is essential. The next important leadership responsibility is to continuously tell your team that quality is very important. हमें सिर्फ काम करने के लिए नहीं करना है. We don't have to do the work just for the sake of doing work. I want good work. I want quality work. So ये inculcate करने की responsibility किसकी है? Leader की. So what are the leadership responsibilities? To tell that or performing audit should be in compliance with all the professional standards and regulatory and legal requirements. To tell you all about the firm's quality control regarding policies and procedures. Then to issue audit reports that are appropriate. To raise concerns without fear. And to tell the fact that quality is very essential. All right. So again, extremely important. We are done with this part. Next question is quite easy. Let's see that question number 10. CAH is managing partner of HK and Company. They have registered office in Delhi. With the annual task of reviewing whether any threat is observed, CAH noted down the following observations received from staff partners of the firm. CAJ, partner of the firm, performs statutory audit as well as non-audit engagement What kind of threat it can create? It can create self-review threat. Okay. So you can see self-review threat. You are doing your own work. You may be checking your own work. CAM, partner of the firm, has also done income tax audit for Happy and Associates, wherein CAM has material significant indirect financial interest. Here it is given already. So which kind of threat it is? Self-interest threat. At the starting of this chapter, I already told you that what are the 5 threats. The cost of air travel, stay accommodation of the family members was given by clients. So which it is? Familiarity threat. Then next, one of the clients threatened to replace. Threatened means automatically intimidation threat. Intimidation threat. CAN, partner of the firm who audited Measures Private Limited, become arbitrator for dispute between 2 companies. Then this is advocacy threat. CAN accepted the assignment of tax audit on behalf of the firm. Management agreed to pay him contingent fee for tax audit. This is self-interest threat. I am getting more and more money, so I will not want to lose this client, and that is why it creates self-interest threat. That's it. This is a very simple question, nothing much. Next. Identify and explain the fundamental principles being referred. So I want to do this question because it covers something very important. Fundamental principles, okay? Let's just revise it quickly. What are the fundamental principles of our profession? The fundamental principles are integrity, objectivity, professional competence, and due care, confidentiality, and professional behavior. This though you should remember in your sleep also. What are the fundamental principles? Integrity. May be a decent person with some principles, with some goodwill. Objectivity, be unfair, be fair, be unbiased. Okay. Professional competence and due care. Keep updating yourself. See that you are competent to do some work. Do the work carefully. Confidentiality. Maintain the client information secrecy. And professional behavior. Behave like a professional in the way you conduct yourself. These are the fundamental principles. Professional accountants should act diligently and in accordance with applicable technical and standards. Which principle this is? This is integrity. A professional accountant shall not knowingly be associated with reports where he believes that information, one second. Yeah. Should not be associated with reports that he believes to be false. This is integrity. And should act diligently. This is competence and due care. Competence and due care. So like this also questions can come which can test your whether you understand the fundamental principles. You have to identify. So act diligently means professional competence and due care, and to not be associated where you know things are false. So this is integrity. Next, CAP is which is the last question. CAP is a professional accountant in service in terms of employment and professional relationships with employer. He has to be alert to the possibility of inadvertent disclosure of any information outside the employing organization. However, in view of disclosure required by law, CAP had to divulge information and documents in course of legal proceedings. Has he violated the fundamental principle? So, my client or any information I come to know even in employment if I'm a CA, I cannot divulge or reveal that information and break the confidentiality clause and tell it to anyone. But if it is required by law and when it is permitted by law, then I have the right to disclose that information. So, in the given situation, CAP, who is a professional accountant in service, and in terms of employment and professional relationships with employer, he is alert to the possibility of disclosures. However, CAP had to divulge this information in course of legal proceedings, and same was required by law. Hence, he will not be held responsible for violation of confidentiality. Okay, so here we are done. We have covered the principles, we have covered the threats to independence, we have covered essay number 210 in detail, and we have also covered essay number 220 in detail. So here we are done with both the chapters. If you have any questions, you can ask me. Otherwise, we can end the class, and I wish you all the very, very best for your exam.
Thank you so much, Akriti ma'am, for this wonderful lecture. And students, today we have concluded our LVRC batch of Auditing and Ethics, paper 5. On the screen, you can see the section-wise weightage of your whole syllabus. Like your chapter number 1 covers around 4 to 6% of the weightage in exam. Similarly, chapter 2 covers 8 to 12. Section 3 comprises of only one chapter, chapter number 3, and the weightage is 8% to 12%. Okay, section number 4 comprises of two chapters, that is chapter number 4 audit evidence, chapter number 6 audit documentation, and the weightage is 12% to 18%. Section 5 weightage is 12% to 20%, which is highest in your overall syllabus. And section 6, which includes chapter number 7, the weightage is 8% to 12%. Okay, and the weightage of chapter 8 audit report is 8% to 12%. The weightage of section 8, which includes chapter number 9 and 10, is 12% to 18%, and the weightage of chapter number 11 is 8% to 8% to 10%. So during your exams, this criteria will be followed. Okay, so do your preparation accordingly. And if you have any doubt, you can ask in the chat. And in the exams, there will be 6 questions, out of which you have to attempt 5. Okay, each question will be of 14 marks. Question number 1 will be compulsory, and your MCQ part will be of 30 marks. Okay, and there will be 2 or 3 case scenarios and 3 independent questions. Okay, depending on your exam. And there is no negative marking in the MCQ part. Okay, students, and if you have any doubt regarding the paper and regarding your syllabus, any question, you can ask in the chat, or you may reach out to us at the US Knowledge Portal query feature. Okay, any doubts? Okay, so thank you, students, and thank you, Akriti ma'am, and wish you all the best for your exams. Yes.